Welcome back to the deep dive. Today we are opening up a file that I think keeps a lot of people up at night.
Or at the very least, completely ruins their Monday mornings.
It certainly does. We are tackling a beast of a topic.
Yeah.
And, it sounds so mundane on the surface. Billing document not generated.
It does, doesn't it? Sounds like a standard IT ticket. A little glitch. Hey, my printer isn't working, or, I can't print this invoice.
Yeah, exactly. It feels like a minor administrative hurdle.
Mm-hmm.
But anyone who works in SAP sales and distribution, SAPSD, they know that this is the moment where the rubber meets the road.
Or, more accurately, where the rubber fails to meet the road and the car just slams into a brick wall.
A complete hard stop.
It is the hard stop. That's how I always describe it to junior consultants. You can have the most beautiful sales order in the world, perfectly entered with all the right materials.
Everything pristine.
Pristine.
Yeah.
You can have the most efficient delivery logistics, trucks leaving on time, picking, packing, all of it perfect. But if that billing document doesn't generate,
the entire process was for nothing.
Exactly. Because if the billing document doesn't exist, the company literally cannot collect money. It stops the order to cash, the OTC, cycle dead in its tracks.
It's completely frozen.
Completely. No billing document means no revenue recognition. It means accounts receivable doesn't get an entry. The customer never gets an invoice. Of course they don't pay. It's a blocked pipe in the revenue stream.
That's the perfect way to put it. It's high stakes. This isn't just AT needs to fix a bug. This is the CFO is on the phone asking why cash flow is down.
Precisely. And that's why today's deep dive is so critical. We've got a stack of source material here that is essentially a master guide for consultants. This is not the textbook definition you get in a certification academy.
No, this is the real world.
This is trench warfare. This is troubleshooting in the wild.
I like that. The material we're looking at today really moves us past that click this button mentality, doesn't it?
It does. We're looking at the architecture of the order-to-cash cycle to understand why the system refuses to create an invoice. It's all about root cause analysis. We aren't just trying to clear a queue of errors. We're trying to understand the logic engine of SAP itself.
And the mission for this deep dive is to transform you, the listener. We want to take you from being someone who just clicks buttons and hopes for green lights.
We've all been there.
Oh, absolutely. We want to take you to someone who understands the golden rule of billing. That's a term our source material uses over and over again. Can you break down this golden rule for us?
I can. The golden rule is the foundation of everything we're going to discuss for the next hour. It states, billing is the final output of a chain of events. If billing fails, the error is almost always upstream.
Upstream. That's such a powerful visualization. So you're saying don't look at the invoice itself because, well, it doesn't exist yet, but also don't look at the transaction of billing as the culprit.
Precisely. The billing transaction, that's VF01, it's just the messenger. It's the last step. It's trying to collect data from everything that happened before it.
So it's just reporting the news.
It's reporting the bad news. If it fails, it's telling you that something went wrong in the preparation. The error is somewhere in the sales order, or the delivery, or the master data, or maybe the copy controls that connect them. It is almost never the billing transaction's fault.
So if you're trying to fix a billing error by, banging your head against the billing screen or trying to force the system to save something,
you are looking in completely the wrong place.
You're wasting your time.
You're trying to fix the roof when the foundation is cracked. You have to go back to the source. You have to go upstream.
Okay, so we are definitely going to be throwing around some heavy hitter transaction codes, decodes today. We've got VF01, obviously, but we're also going to get intimate with VS04, VTFL, VOV7.
A lot of alphabet soup there.
A lot. If those sound like alphabet soup to you right now, don't worry. By the end of this deep dive, they're going to be your best friends.
Or your worst enemies, depending on how the configuration is set up in your system. But at least you'll understand them.
A fair point. Okay, let's jump right into phase one, the initial diagnosis. The source material has a very specific warning right out of the gate, and I love this because it's so practical. Don't trust the screenshot.
This is rule number one for any consultant, really, but it is especially true in billing. A user sends you a ticket. Urgent. Cannot bill. And what do? They attach a screenshot of the SAP status bar at the bottom of the screen. And what does it say?
It says document not created in big red scary letters.
Exactly. Document not created. That tells you absolutely nothing. It is a generic catch-all failure message.
It's like a check engine light in a car.
That's the perfect analogy. It tells you something is wrong, but it could be a loose gas cap or it could be a blown transmission. You cannot diagnose a car from that one light, And you can't diagnose SAP from that one screenshot. The user thinks they are helping, but they aren't giving you the data you need.
So the user is panicking. They've sent you this red text. What is the actual consultant action here? What do you do first?
You have to replicate it. You cannot troubleshoot by proxy. You go into VS01 yourself. You enter the document number, the delivery, or the order. You hit enter, and when it fails and you see that message, document not created, you don't just stare at the status bar.
Okay, so where do you go?
You go to the menu bar at the top of the screen, you click edit, and then you click log.
The log. It sounds so obvious, but I bet a lot of people miss it because it's kind of tucked away in the menu.
They do. They assume the status bar is the error. It's not. The log contains the specific message class and number. For example, it might say VF050 or VO032. That specific code is the breadcrumb trail. That leads you to the actual problem.
So the log might say something more specific, like pricing error or date invalid.
Precisely. Without the log, you are just guessing. You are basically throwing darts in the dark, hoping you hit something. The log is the flashlight.
Okay, so step 1. Ignore the user screenshot, run it yourself, and open the log. Now, the source also mentions using VS04, which is the billing do list, as the diagnostic tool. Now, usually I think of VS04 as the thing we run in the background to mass process invoices at night. It's a batch job tool.
It is, but it's also a fantastic diagnostic tool.
How do we use it for troubleshooting a single error?
This is a brilliant little trick that separates the pros from the rookies. You run VS04 manually in the foreground. You input the sales organization and the specific document number you're trying to build, be it the delivery or the sales order, and then you hit execute. And you watch what happens. The source describes this as a fork in the road.
A fork in the road. Okay, take us down path A. What's the first scenario?
Scenario A is that the document does not appear in the list at all. You run the search, filtering for that specific delivery note, and the list comes back completely empty. No documents found.
That feels like a ghost town. What does that mean? What's the implication?
It's a massive clue. It means the system doesn't even think the document is billable yet. It's not even in the queue.
It's not even trying.
It's not even trying. If that happens, your focus immediately shifts to status or dates. The system is waiting for something to happen, like a goods issue to be posted or a specific date to arrive, before it even considers this ready for billing. You can stop looking for errors and start looking for missing steps.
That saves so much time right there. You know, it's not some kind of data locking issue because it's not even trying to lock it. It's just invisible to the billing engine.
It's invisible, exactly.
Okay, so that's path A. What is scenario B?
Scenario B is that the document does appear in the list. It's sitting there waiting. But when you select it and try to process it, it fails. It gives you an error in the log.
So it's invited to the party, but it can't get through the door.
That's a great way to put it. This suggests a completely different set of problems. Usually that's data consistency or locking issues. The system knows it should bill it, it qualifies, but it hits a technical wall when it tries to execute the logic.
So for instance, maybe someone else has the sales order open in edit mode at that exact moment.
Exactly. Or maybe there's a mismatch in master data that only gets checked during the creation process.
That is a crucial distinction. It saves you from looking for a needle in the wrong haystack. Okay, let's assume we are in that scenario, a territory. The document isn't generating, or it's missing from the list entirely. The source says 90% of tickets fall into the big 4 failure points. Let's unpack category A status and process flow.
This is the most common one, by far. It boils down to the concept of completeness. Billing simply cannot happen if the preceding steps aren't finished. And the absolute biggest culprit here, the heavyweight champion of billing errors, is the PGI, the post-goods issue.
Right. For those who might be new to the terminology, PGI is essentially telling the system the truck has left the building, the goods are gone.
Exactly. It's the moment inventory ownership transfers. If you were doing standard delivery-related billing, which uses item category TAN,
Right.
the standard for physical goods, the billing is strictly dependent on the physical movement of those goods.
And how do you check that?
You go to the delivery status overview in transaction VL03N. You need to see the goods movement status as C, which means completed.
And if it's A, what does that mean?
A means not processed. The inventory is technically still on your books. The warehouse might have physically loaded the truck. The driver might be halfway to the customer's site. But if nobody has clicked that button in SAP,
As far as the system is concerned, the goods are still sitting on the shelf.
they're still in your warehouse.
And here's where I want to dig into the why. This is really interesting. The source says SAP prohibits billing in this state because the cost of goods sold, COGS, hasn't been realized yet. Can you explain that connection? This is where logistics meets finance.
This is where SAP SD meets SAP FI. It's a perfect integration point. When you post the goods issue, two critical things happen in the background. First, your inventory quantities go down. Second, the value of that inventory is posted to the cost of goods sold account on your P&L, your profit and loss statement.
So you're recognizing the cost of the sale.
Precisely. Now, when you bill, you recognize the revenue of the sale. And there's a fundamental rule in accounting called the matching principle. It says you should match revenues with their corresponding expenses in the same accounting period.
Right. So you can't have one without the other. You can't claim the reward without acknowledging the cost.
And SAP enforces this rigidly. You cannot recognize revenue, which is creating the bill, if you haven't recognized the cost, which is the PGI. If the system allowed you to bill without PGI, you'd have profit on your books with zero associated cost, which would artificially inflate your margins.
Which is bad bookkeeping.
It's bad bookkeeping, and in some cases, it could even border on accounting fraud. So the system protects you from yourself. If PGI isn't done, that invoice gate is locked tight. No exceptions.
That makes perfect sense. It's not just a technical glitch. It's a financial safeguard. It's checking the books before it writes the receipt. Okay, what about the second status issue, blocking?
Blocks can be sneaky. You have the explicit billing blocks, which are pretty easy to spot. You can see them on the header or item level of the sales order.
Where do you look for that?
You just go to the Billing Document tab in VA03. If there's a code in there, like O1 check terms or O8 check prices, it won't bill. That's easy. The field is populated, you see it, you know what to do.
But then you have what the source calls the trap.
The trap. I love that description because it catches so many people. We're talking about credit holds.
How does a credit hold differ from a billing block? Why is it a trap?
Visually, it's hidden. A sales order might look perfectly fine on the main screen. The billing block field might be completely empty. You look at it, you say, hey, there's no block here. What's the problem?
But there is a problem.
There is. If the credit status, specifically the field VBUKCMGST, is not approved, the system puts up a wall. It acts as a billing block.
So the user is looking for a field called billing block to be checked, but it's actually the credit management module silently screaming, no, stop.
Exactly. Depending on whether you're using the newer FSCM or the classic credit management, a credit hold functionally acts as a billing block. The system is saying, this customer hasn't paid their previous bills, or they are way over their credit limit, say a $10,000 limit and they have a $12,000 balance. We are not going to let you generate another invoice and dig this hole any deeper.
It's a silent guardian. It stops the company from giving away free product to someone who can't or won't pay.
It is. But for a consultant, it's a headache if you don't know where to look. You have to navigate to the status tab specifically for credit status and see if it says B for credit check failed or if it's been released. If it's not released, no bill. Period.
Okay, that's a great tip. Now, the third element in this category is the incompletion log. This feels like the system telling you, hey, you didn't fill out the form correctly.
That's exactly what it is. In the background, there's something called an incompletion procedure, which is configured in Transaction OVA2. And it basically defines which fields are mandatory for different stages of the process.
So, for example, you can't ship a product without a shipping address.
Right. Or you can't create a bill without payment terms or Incoterms. If a field is marked as critical for the function of billing, and that field is empty in the sales order, the status group assigned to that field will prevent the document from ever entering the billing due list.
So it effectively hides the document from the billing engine.
It hides it. The system says this isn't ready for prime time and just puts it to the side.
So as a consultant, if I'm in the sales order or the delivery, one of my forced checks should always be to go to Edit Incompletion Log.
Always. It is the first sanity check. If the system pops up a box that says document is incomplete, you stop debugging immediately and you start data entry. You fix the missing field, add the Incoterm, add the payment term, and suddenly, like magic, it appears in the billing list. It's often the easiest fix, but it's so frequently overlooked.
Okay, that covers the process flow issues. That's category A. Now we are going to level up. The source calls this next category the technical gatekeepers. We are moving into category B, copy control.
This is where we separate the casual users from the true consultants. Copy control is the configuration that determines how data flows from one document to another. We are talking about transaction codes, VTFL for delivery to billing, and VTFA for order to billing.
I always visualize copy control as the bridge between two islands. You've got the delivery island and the billing island. If the bridge is out, the data can't cross.
That's a great analogy. But it's not just a bridge, it's a checkpoint. It has guards at the entrance checking passports.
And the guards are the copying requirements, which are also known as VOFM routines.
Exactly. Inside VTFL, you select your source document type, say a standard delivery, and your target document type, an F2 invoice. You go down to the item level, and you'll see a field there called copying requirement. It usually has a number, like 004.
Okay, what does that number represent? It's not just some random ID, is it?
No, not at all. It represents a snippet of ABAP code. It's a logical check, a little program. It dictates if the data is allowed to flow from the delivery to the billing document. It runs every single time you try to create a bill.
Can you give us some examples of what these routines actually check? What's happening inside routine 004?
Sure. The most standard one for delivery-related billing is routine 004. This routine checks two main things. First, is the PGI done? It literally checks that status field we just talked about.
Okay.
Second, it checks if the billing status is not already C for completed, to prevent duplicate billing. If either of those checks fails, the routine returns a false, and the billing process stops right there.
Simple enough. It just enforces the rules we talked about earlier, but at a code level.
Right. Then you have another one, routine 002, which is commonly used for order-related billing. It checks if the overall order status is complete. And for intercompany billing, you have a special one, routine 011. This one is more complex. It checks if the plant belongs to a different company code than the sales organization.
To make sure it's actually an intercompany sale.
Exactly. It validates that an intercompany relationship actually exists. If you try to run intercompany billing for a domestic sale, routine 011 will block it.
Now, the source material gives us a deep dive debugging method here. This is fascinating because it allows you to see the matrix, so to speak. Let's say I suspect routine 004 is failing. I'm pressing the button, nothing is happening, and I think this routine is the culprit. How do I prove it?
You have to put on your developer hat for a minute. You go to Transaction VOFM.
VOFM, got it.
You navigate down the menu to copying requirements and then to billing.
Yeah.
You find the routine number, say 004. Then, and this is the really cool part, you can actually double-click and view the ABA code behind it.
So you're looking at the logic itself, the actual code.
You are. And what you do is you place a breakpoint in that code. You just click on the margin next to the line numbers. Then you keep that window open, you open another session, and you go back and run VS01 again.
And what happens when I hit enter in VS01?
The system will pause, it will freeze, it will then flip you over to the debugger window right at that line of code where you set the breakpoint. You are now watching the system think in real time.
Wow. And what are we looking for in the debugger?
You step through the code line by line, usually with the F5 or F6 key, and you watch the value of a system variable called SYSUBRC.
SYSUBRC, that's the system return code, right?
That's the one. In the world of ABOP, 0 means success. Everything went fine. Anything else, usually a 4, means failure. If that routine finishes its checks and SYSUBRC is not 0, the requirement has failed.
And because you are stepping through the code, you can see exactly why it failed.
That's the power of it. You might see a line of code that says, check if billing date is greater than PGI date. And you'll see the values of those two dates, and you'll see the check fail. It takes all the guesswork out of it. You aren't hoping it works. You are watching it fail and understanding exactly which rule you broke.
That is incredibly powerful. It empowers the consultant to say, with 100% certainty, it failed here because of this specific check, rather than just shrugging and saying, I don't know, it's not working.
It's the difference between saying it's broken and saying the logic requires the billing date to be after the PGI date, and we are violating that rule. One is a complaint, the other is a diagnosis.
Which actually leads us perfectly into the next category. But before we get to dates, we need to talk about what the source calls an identity crisis. This is Category C billing relevance.
This is all about configuration, specifically transaction VOV7, which is the item category definition. There's a single field in there called billing relevance. It's just one letter, but that one letter defines the entire personality of that line item.
Personality is a great way to put it. It tells the item what it wants to be when it grows up. Let's run through the common personalities. What does A stand for?
A is the standard for physical goods. It means delivery-related billing. It's basically saying, I am a physical product. I need to be put in a box and shipped, and you need to PGI me before it can be billed. If you have billing relevance A, the system will only look for completed deliveries to create an invoice.
Okay, that makes sense. And B?
B is order-related billing. This is the standard for services or for credit and debit memos. It says, I am an idea or a service. I don't need a truck. You can bill me as soon as the order is entered and complete. It bases the bill on the order quantity.
Got it. What about F? That one's a bit different.
F is for invoice plans. Think about rental contracts or long-term maintenance agreements where you bill periodically. Bill me $100 every month for 12 months. It doesn't look at a delivery or an order quantity the same way. It looks at a predefined date schedule.
Okay. And the last one, G. This one always seemed a little confusing to me.
G is interesting. It's order-related billing, but it bases the quantity on the delivery quantity.
Wait, isn't that a contradiction? Order related on delivery quantity? How does that work?
It sounds like one. It's used for services that need to be confirmed. Let's say you sell 10 hours of consulting. That's your sales order. But you only want to bill for what was actually done this week.
Right. Maybe the consultant only worked 5 hours.
Exactly. So you deliver, or you confirm 5 hours. With setting G, the system looks at the order for the pricing and terms, but it bills the quantity from that confirmation document. It essentially treats the delivery as a timesheet.
Ah, that makes sense. The source gives a real-world troubleshooting example here that I think clarifies this beautifully. It mentions a service order with item category TAD.
Right. This is a classic configuration mistake that happens all the time.
Yeah.
A user creates a service order. Services are intangible. You don't ship a box of consulting. The standard item category for services is TAD. But let's say the consultant who configured the system accidentally set the billing relevance for TAD to A.
A being delivery related.
Exactly. So the system is sitting there waiting for a delivery truck to leave the warehouse.
For a service that will never be delivered on a truck.
Right. It's waiting for a PGI that will never happen. So the document just sits in limbo forever. It never shows up in the billing list. The user is screaming, why can't I bill this service?
And you, the super consultant, what do?
You go check VOB7. You look at TAD, you see the billing relevance is A, and you realize, wait a minute, services don't have deliveries. The fix is to change that relevance to be order related.
I mean, as soon as you make that change.
As soon as you save it, the system says, oh, I don't need a delivery for this. Okay, I'm ready to bill. And the invoice generates.
It's like magic.
But it's not magic, it's logic. That single field controls the whole process. One letter.
I love that. It's not magic, it's logic. Okay, let's move to category D, date logic. The source says SAP is extremely strict about dates.
It's basically a time travel police officer. The system logic is built on the assumption of linear time. The most common error you see here is the billing date versus PGI date.
What's the rule there?
The rule is simple,
Yeah.
and it makes business sense. You cannot bill a customer for goods before you have legally shipped them. Therefore, the billing date must be greater than or equal to the PGI date.
That seems obvious in real time. But when does this actually fail in practice?
It fails constantly during retroactive billing, especially at month end. Imagine it's January 5th. You realize you forgot to ship something in December. So you rush to the warehouse, you do the PGI. The PGI date is today, January 5th.
Okay.
But the finance team comes to you and says, we need that revenue in December. The quarter closed in December. So you go into VF01 and you try to create the invoice with a billing date of December 31st.
And SAP says...
Nice try. It will give you a hard error. SAP says, on December 31st, those goods were still in your inventory. You cannot invoice for something you didn't ship yet. It blocks you.
So the error billing date must be greater than PBI date is actually the system preventing you from lying about when the transfer of ownership really happened?
That is exactly what it is. You cannot bill for the past if the actual logistic event happened in the future relative to that date. You have to bill it in January.
Okay. The second date scenario mentioned in the source is the service's rendered date.
This is specific to service billing. The service's rendered date in the sales order is a critical field because it determines tax and pricing validity.
How can that cause a failure?
Well, if you set the service's rendered date to a date that is in a closed accounting period, the system will block it from posting. Or maybe that date falls on a holiday that's defined in the customer's factory calendar, and you have strict calendar checks active. The system might say, you can't render a service on a day the customer's factory is closed, and fail the transaction.
It's amazing how many layers of validation are happening in that split second when you hit save.
It really is. It checks inventory status, credit status, date logic, accounting periods, tax validity.
And if any single one of those checks returns a false, the whole process aborts.
Correct. And that's why billing document not generated is such a broad bucket. It could be any one of those things.
Okay, we've covered the big four categories. Now, let's get into the weeds a bit. Phase 6. Advanced troubleshooting split analysis.
This is for a slightly different but very common problem. This is when the system tries to generate a bill, but it behaves unexpectedly. For example, maybe you want to combine 5 different deliveries into one big invoice for a customer, a collective invoice. You want to save paper and postage.
Right.
But for some reason, the system splits them into 5 separate invoices. Or the generation just aborts entirely during a collective run.
And the tool here is the split analysis inside the VFO4 simulation. I feel like not enough people use the simulation mode.
You don't. They just run it and hope for the best. You go to VFO4, you select your documents, and instead of clicking Save or Collective Billing Document, you click Simulation.
And what does that show you?
It shows you what would happen if you really ran it. If you see multiple invoice lines where there should only be one, or if you see error logs, you highlight the lines and you click the Split Analysis button.
Okay, and what does that button reveal? What's the secret?
It does a side-by-side comparison. It compares the header fields of the potential billing documents. That's the data that would go into the table of the VBRK. It looks for what I call deal breakers.
Deal breakers, I like that. What are some of the common deal breakers?
In SAP, for 2 deliveries to combine into one invoice, certain header data fields must be absolutely identical. We're talking about Z term, the payment terms,
Okay.
VK or G, the sales org, key NRG, the payer, way or K, the currency, the Incoterms. All of these have to match perfectly.
And if even one of those is different, even slightly.
The deal is off. SAP cannot generate a single invoice document with 2 different payment terms. It physically can't do it. You can't have net 30 and net 60 on the same invoice header. So it's forced to split them into 2 separate invoices.
And the split analysis tool highlights exactly which field is causing the split. Right?
Yes, that's the beauty of it. It puts the data from the 2 documents side by side, and it highlights the difference in red. It will show you delivery A has payment term ZB001, delivery B has payment term ZB002. Boom, mystery solved.
The source notes that custom validations often cause this.
Oh, absolutely. This is the self-inflicted wound scenario. A developer might write a custom routine in the copy control that says, if the customer group is X, then change the payment term to Y.
I see where this is going.
If that logic applies to one delivery but not the other, the data changes in the background during the billing creation process. The user looks at the sales orders and says, they look the same to me. But the billing simulation sees the difference because of that custom logic. The split analysis is the only way to see that clearly without digging through lines of code.
Okay, speaking of digging through code and tables, let's go into the technical deep dive, phase 7. The source says, to be a real hands-on expert, you must be comfortable looking under the hood. We are talking about the database tables.
Yes. Transaction SC16N. This is the consultant's X-ray vision. You can't just rely on the transaction screens. Sometimes you have to look at the raw data in the database tables. There are 3 tables mentioned here that are absolute legends in SAP SD.
Start us off with VBUK and VBUP. What are they?
These are the status tables. VBUK is the header status, and VBUP is the item status. Now, a quick note for our listeners on S4 and IANA. Some of this status information has been moved into the main document tables, but the logic remains the same.
Good clarification. Okay, so what are we looking for in these tables?
You're looking at the field FKSTK, that's the billing status.
FKSTK. And what are the key values we should look for?
If FKSTK is C, SAP thinks the document is already billed. That's it. Game over. You can't bill it again. If it's blank, it thinks it's not relevant for billing at all. And if it's A, it means not processed. It should be billable.
And sometimes there's a mismatch, right? The source mentions data inconsistencies.
Yes, this is a nasty one. Sometimes, due to a system crash or a badly written user exit, the header status in VBUK might say A, not processed, but the item status in VBUP says C, complete.
So the system gets confused.
Completely confused. It tries to bill the header, but the item says, nope, I'm done. In those rare cases, you might need to run a special correction report like RV-Delsta to realign the database statuses. But you would only know to do that if you looked at the tables directly and saw that mismatch.
That sounds dangerous but necessary. Now tell me about VKDFS. The source calls this the billing index.
VKDFS is the most critical table for VSO4, the billing do list. Think of it as the waiting room for billing.
The waiting room, okay.
When you run the billing do list, the system isn't scanning every sales order and delivery in history. That would take forever on a large system. Instead, it's just reading this one table, VKDFS. This table contains a list of every single document that is currently ready to be billed.
So if a document is missing from VKDFS,
It is completely invisible to VSO4. It doesn't matter if the status in VBUK is perfect. It doesn't matter if the dates are perfect. If it's not in the VKDFS waiting room, the billing run walks right past it. It doesn't even know it exists.
That is a massive insight. So if I have a perfect document that just will not show up in my VF04 run, I should check VKDFS and SE16N. If it's missing, what do I do? Is there a fix?
There is. You rebuild the index. There is a standard SAP report called RVV05IVB. You run it for that specific sales document. It scans the document, realizes, hey, this thing should be in the waiting room, and it creates the entry in VKDFS.
And then you run VS04 again.
And voila, it appears. It's like putting a patient's file back on the doctor's schedule after it got lost.
Brilliant. That's the kind of trick that makes you look like a wizard to the client. Now, the source mentions one more technical element, user exits, specifically RV60AZZ. It calls this the Holy Grail.
RV60ASDZ. Every SAP SD developer knows this name by heart. It is the main include program where we can inject custom AB app code during the billing creation process. It has sections like user exit number range or user X to pricing prepare. It's where we customize the standard behavior of the billing engine to meet a company's unique needs.
But the source also mentions a danger here.
It's a double-edged sword. Let's say a developer adds code to check a custom Z table for special customer credit limits, something totally outside of standard SAP. If that Z table lookup fails or it returns a block status, the developer might have coded a message, a hard error message.
And what happens then?
The billing creation stops instantly, hard stop. And sometimes, because it's a custom error, it doesn't log cleanly in the standard VFC01 log. It just crashes the process or returns that generic document not created message without giving you a clear reason why.
So if you have a mysterious failure that doesn't fit any of the standard categories,
Always ask the question, do we have custom code in RV60ASCZ? Because that's often where the ghost in the machine is hiding.
check the custom code. Always good advice. Okay, we have covered a mountain of information. Let's synthesize this into the resolution playbook. The source outlines a strict 4-phase strategy to solve these tickets fast. Let's walk through it. What is phase 1? The sanity check. 5 minutes.
Phase 1 is about gathering facts quickly and catching the easy stuff. First, check the document flow, VBFA. Is there already a canceled billing document, maybe an existing invoice that just hasn't been released to accounting?
Good point.
Second, check PGI status. Is the delivery fully picked and has it been goods issued? Third, check for blocks. Is there a billing block on the sales order header or item, or a credit block? And finally, run VS01 in the foreground. Do not use VS04 yet. Enter the number, hit enter, and read the error log. Do not spend more than 5 minutes on this phase. This catches the silly errors.
Okay. If that doesn't solve it, we move to phase 2, config validation, 10 minutes.
This is where you check the setup. First, item category VOV7. Confirm the billing relevance. Is it A? Is it B? Is that correct for the business process, like that service order example we talked about? Second, copy control VTFL, Does the entry even exist for this specific sales doc type to billing type?
Yeah.
Is the correct copying requirement, like routine 004, active?
Makes sense. If that's all good, we move to phase 3, pricing and accounting analysis, 15 minutes.
Now we look at the financial data. First, pricing. Check the pricing analysis in the sales order. If the pricing procedure fails to find a mandatory condition type like PR00, the system can block the posting. You can't bill something with a 0 price if the configuration forbids it.
Right.
Second, account determination. Now this usually happens after the invoice is generated, preventing the posting to FI. But severe errors in VKOA, which is the GL account assignment, or missing GL accounts can sometimes trigger a rollback during the save event itself. The system says, I can't find a GL account to post this revenue to, so I'm just going to abort the entire save process.
And finally, if all of that fails, phase 4, technical debugging. This is the last resort.
This is when you call in the big guns. You activate the debugger with the command H. You set breakpoints in the main billing program, SAPLV60A, or more specifically in the function module, RVN invoice create. You watch the internal tables like XCOMV for pricing and XVBRK for header data. You step through the code and see exactly where the processing terminates. This is the nuclear option, but it always finds the truth.
That is a solid game plan. It moves you from guessing to hunting. I love it. Before we wrap up, we have to touch on phase 9, special scenarios. These are the edge cases that drive consultants crazy because they break all the standard rules. Let's start with third-party orders, TAS.
TAS is tricky.
Yeah.
This is where you don't deliver to the customer, your vendor ships directly to them. The item category is TAS. The error is almost always that the user can't bill the customer. They say, I have the order, why can't I bill it?
And the cause is?
The cause is almost always that the system is waiting for the vendor invoice, which is transaction MIR.
Why is it waiting for that?
Because in a third-party scenario, the billing relevance is usually set to F, which means order-related billing based on the invoice quantity. The system's logic is we can't bill our customer until we know what our vendor charged us. So if your accounts payable team hasn't posted the vendor's invoice in the module yet, you cannot bill the customer in the SD module.
So the fix for an SD problem is actually in the module.
Exactly. You have to go talk to the accounts payable team and ask, has the vendor invoice for this purchase order been entered into Mero yet?
Fascinating. Okay, what about intercompany billing for?
This is the invoice between two of your own company codes. The sequence here is absolutely critical. You must post the customer invoice, F2, to accounting first. Only after that is complete can the intercompany invoice be generated.
So if the F2 invoice is created, but it's blocked from posting to accounting?
The IV will not generate. The system waits. You also need to check the copy control requirement, usually 011 or 01 scene, which are specifically designed to enforce these intercompany rules.
And the last one on our list, proof of delivery, POD.
This is becoming more and more common, especially in retail and consumer goods. If your system uses proof of delivery, then PGI is not enough. The customer master record has a little checkbox that says POD relevant.
And what does that mean for billing?
It means the system is waiting for an additional step, the VLPOD transaction confirmation. It needs verification that the customer received the goods, not just that you shipped them. The symptom is always the same. PGI is done, the status is C, but billing is blocked.
And the fix is to go into VLPOD.
Exactly. Execute transaction VLPOD, confirm the quantity and date, and then the status updates to allow billing.
Incredible. We have really dissected this topic from every possible angle. So let's do a quick mental checklist for you, the listener. Before you close that next billing ticket, ask yourself these questions.
1. Is the PGI complete?
2. Is the billing date valid? Is it on or after the PGI date?
3. Are there any blocks? Credit block, delivery block, billing block.
4. Is the pricing complete? Are there any mandatory conditions missing?
5. Is the copy control in VTFL active and correct?
6. Is the item category billing relevance correct for the process?
And 7, the sneaky one, is the document actually sitting in the VKDFS table?
If you can answer yes to all those questions, you've solved the ticket.
100% of the time, you will find the issue within that checklist.
And that brings us back to the philosophy of this entire deep dive. We aren't just closing tickets here.
No. By fixing these issues, you are ensuring the integrity of the company's revenue pipeline. You are making sure the cash register actually rings at the end of the day. That is a massive responsibility, and it requires a methodical engineering mindset, not just a help desk mindset.
It transforms you from a support person to a solution architect.
Right.
So the next time you see that error, billing document not generated, don't groan, look at it with a detective's eye, follow the golden rule, look upstream.
And never, ever trust the screenshot.
Never trust the screenshot. Words to live by. That's it for this deep dive into SAP SD billing. Go fix some errors.
Happy troubleshooting.
See you next time.